Assalamualaikum and very good day all listeners. My name is Nadya Fira Efendi. Will be presenting to you a subject on accounting of sukuk focusing on Malaysia Global Sukuk Incorporated. Check this out.
What is sukuk? Sukuk are certificates of equal value that represent undivided ownership of underlying assets used for services or investment in particular projects or special investment activities. Sukuk is also known as Islamic bonds. Now, if sukuk can be said to be Islamic bonds, then what is the difference with bonds? The fundamental thing that distinguishes sukuk and bonds is the nature of the instruments. In bond investment, bonds are valued as debt securities. Meanwhile, sukuk assesses it as a certificate of ownership or asset purchase. Therefore, sukuk has underlying asset as proof of investor ownership of Islamic bonds, while bonds do not need that. And sukuk must comply with Sharia principles so that funds managed cannot be used for things that are against Sharia principles, in contrast to bonds that do not have Sharia restrictions. Then the income between the two will be different even though sometimes the names are similar. Then how the sukuk works? Sukuk will be different structure in according with the contract between special purpose vehicle or SPV and the originator that will further determine the distribution of the profit to the sukuk holders and redemption the sukuk when it reaches maturity level. Now we will focus on Malaysia Global Sukuk Incorporated. In June 2002, Malaysia successfully launched the world's first international Islamic bond issue based on Ijaro concept, namely Malaysia Global Sukuk Incorporation. Unlike lease financing under conventional methods, the responsibility to maintain the underlying assets under the Ijaro facility rests on the lessor. The lessee is only responsible for lease payments as long as the asset is operable. What are the steps included in Malaysia Global Sukuk Incorporated scheme? In this case, there are 4 parties involved, including the government of Malaysia as the originator, Malaysia Global Sukuk Inc. as the issuer SPV, Federal Land Commissioner as tenant, and sukuk holders. So, let's discuss step by step below. First step, Federal Land Commissioner as a tenant sells beneficial interest in land parcel to issuer SPV. Then the second step, issuer SPV enters into a master Ijaro agreement with originator. In the third step, the issuer SPV issues sukuk certificates to the holders as a representing undivided proportionate ownership in the underlying land parcels, which gives rise to a share in the rental payment in master Ijaro arrangement. And fourth, sukuk holders make a payment of proceeds from sale of sukuk. Fifth, the Federal Land Commissioner proceeded, and after proceed, the originator pay a periodic payment of rental. And 7. When maturity of debt, in this case 5 years, SPV sells the land to originator at an agreed price. 8. The originator pay cash to SPV. And the last step, SPV pay a payment of rental and at maturity pay cash for sukuk redemption. After understanding the basic scheme, what about the accounting recognition? Accounting treatment in Malaysia adopted from MFRIS 9 that replaces the existing MFRIS 139, Financial Instrument, Recognition and Measurement. Refer to Malaysia Global Sukuk Incorporated based on the Ijaro concept. The accounting consideration discussed solely focus on the basic recognition and measurement accounting guidance and may not be include disclosure requirement, such as related party disclosure are not included. First, consolidation. Government of Malaysia as originator would need to consolidate issuer SPV Malaysia Global Sukuk Incorporated as it is deemed to have control. Second, the recognition. Since the SPV receives Ijaro payment monthly and passes those payments to the sukuk holders on a periodic basis, the originator determines that this would constitute a material delay. As such, it cannot recognize the Ijaro receivable transferred. Therefore, the originator doesn't remit cash flows to the sukuk holders without material delay. The transfer is treated similarly to a secured borrowing. Third, classification and measurement. From the originator perspective, the sukuk issuance is a liability measured at amortized cost, While, from the investor perspective, the sukuk certificates are considered assets, which are classified as loans and receivables. These certificates are measured at amortized cost. Fourth, fair value measurement, as both originator and the sukuk holders measure their sukuk interest at amortized cost, so that there is no requirement to determine the fair value of the sukuk issuance. Next, fifth, impairment. The sukuk holders assess for impairment in their sukuk certificates at each reporting period and would need to determine if the sukuk certificates are impaired. In this Malaysia Global Sukuk Incorporated case, through the 5 years, no losses were incurred or were expected to be incurred. Thus, no impairment was recognized. And then guarantees. Both the originator and sukuk holders would have to assess the accounting ramification for the guarantee issued by the originator. For the originator, the guarantee would be accounted for as financial guarantee contract. The guarantee would be initially recorded at fair value, with subsequent remeasurement at the higher of 1. The fair value at exception less amortized cost, and 2. Its value as a contingent liability. For sukuk holders, the guarantee will be accounted for as a contingent asset, only recognizing the guarantee if and when it is virtually certain that sukuk holders will receive payment from guarantee.
That's video this time that discuss about accounting of sukuk focusing on Malaysia Global Sukuk Incorporated. Hopefully this is useful. Thanks for watching the video. Assalamualaikum warahmatullahi wabarakatuh.